What's going on, people? It's your boy here again, Henry TV, and in this video I am going to show you exactly how I was able to get 10% this morning. Not 10%, like 9.8%, so round it up to 10%. So if you were somebody, say you were doing like the FTMO challenges and all that stuff, you would have passed all of that, like the first part in the first the just one day today where the market was just consolidating. You're like, well, I am using the ICT concept. So I've been studying ICT since last year. Well, I'm going to give you a little bit more about it later, but without any further ado, let's jump into exactly what I did and the trades that I took. So click. So this is the first trade. If you can notice, I'm just toggling back to like the 5 minutes and stuff here. So first trade, I was hoping it could come all the way back down there, but I think it's already gone. So I use it's an institutional entry order flow. It's an IOF. So that was what I used to enter that, which means the gap below that gap that I entered on, it's not going to trade to that yet. So got 5 handles, which is 5 pips for US 500. You're like, 5 pips, that's so little, but just wait and see, wait and watch. That's the first trade. The second trade I already entered, but I placed like the actual object, like the entry and exit objects on the wrong place. So entered right there, it kept going down. I was going to get more in, but I couldn't. So I just kept watching it until it go all the way down. I wanted it to get down. You see, like there's set side liquidity under there. I wanted it to get all the way down, but it didn't. So, which was all right. At this point in time, I was contemplating. I was like, you know what? I'm just going to be patient because I know if it didn't get to that point exactly where I wanted it to go, like that 9.75, because it was going to be 9.5. But if I put the object tree underneath there, is going to be 9.5. So I was like, okay, I'm just going to stick to exactly what my take profit is, which is 9.75, and waited for it, and it got there. So 9.5, 9.75, not bad. So at this point in time, my OBS, I was using OBS to record, and OBS was getting hot. So I had to switch to Camtasia. So switch to Camtasia, and this is the other trade. I should have used Camtasia from the get-go. It doesn't make your computer as hot as OBS. OBS like burns your computer up. So I go into another trade there. I was seeking 500 move, and it literally, I hate trades like that. I could have got my 500 moves. If you notice, I moved my stop loss to break even, so I got stopped out. And here it pushed all the way down. The moment it came back up, I got out of that trade. So if you notice what exactly I'm doing there when I took all those, like the object tree out. Here, got into another trade, saw another opportunity, and I was looking for buy side liquidity up there. Got in. I was hoping it could come down a bit more to touch that fair value gap underneath, but it didn't. So it was all right. And then I got another opportunity, and I put in another position to take me all the way up, and boom, closed right there. And right here, you would think I was done. So I wanted to push the envelope a little bit because I want to stress test it. The point of this is not for you to abuse it. It's for you to be very confident, because you need to keep watching price doing this. You need to keep not just back testing. Back testing is good, but actually seeing it live, annotating exactly what you see. And I got one more trade right here. I got in, didn't even think about it twice, got in. I think this was another 5 handles, 4.75. I should have been rounding up to like 5 handles, which is 5 pips, but I was... So this last trade right here, I was actually in the bathroom. Yesterday was Valentine. I had a lot to eat. So I was in the bathroom. So I would have targeted 5 handles, which is 5 pips for this. But hey, it still worked out well. And then price just kept going, and I was done. So now I'm going to jump into the charts and show you exactly, and we'll do a little bit of calculation to let you know that this came out to be almost 10%. Okay. It's already PM session. So 15 minutes chart, New York, 8:30 to 11:30. You can push to 12, usually 11:30. If I haven't seen anything, I'm literally done. Like I say, you can wait till 12, but me personally, 11:30. So you can see it's like exactly what's going on. You can say, well, you can get a little bit of move from like this other block right here. Of course, just like a gap, you can say, oh, you entered right here. Let's say you entered right here. Stop loss is at 10 pips and or 10 handles, and you were able to get like 14. That's not a bad trade. Honestly speaking, if you do that every single day, even if it's once a week, trust me, you can do a lot with this. Now, you see this, the time between here and here, a lot of people's like, it's just noise. There's nothing. It's absolutely garbage. Now, we go to 5 minutes. Give it a second. Okay, there you go. 5 minutes, you can see it's just going up and down, up and down, up and down, up and down. And when I was doing a lot of retail-minded trading, like retail strategy, and like if you had like two moving averages, it will cross multiple times. Like you lose a lot of money here. But now I'm going to show you. Let's go to 1 minute, and then I'll turn up my drawing. So you can see this was the first trade. Liquidity was grabbed right here. Market structure shift. Okay, I was expecting it to come all the way back down here so I can execute, but hey, this is close proximity entry, so I was still within. It was going to the direction that I wanted it to go, so I still entered right here, and my stop loss was literally right below this candle. So if you're risking 1%, say you have $100,000 account, you're risking 1%, reward is 1.5, which gives you $1,540, which is literally, you can see that literally got up there right to the tick, and it started coming back down. So that was the first trade. So this liquidity was grabbed right here. I saw that, and then if you notice here also, equal highs 1, 2, 3, and 4. It tapped it up, and that was all I needed. You don't need so much for, liquidity, sweep of liquidity or buy side liquidity gets taken and stuff. So this market structure shift happened right here. This little tiny one here, I got in here, but the object I entered and the object tree, I placed it here. So go in, and then originally I wanted price to come all the way down here. The reason also I wanted price to come there, if you know, is this long wick. The 50% is like right, yeah, this is the 50% of this long wick. So I wanted price to get right here. So consequent encroachment of this long wick. So but the way price was moving and stuff, I decided to just wait and just take my exit at the close of this gap right here, which is not bad. That was a 9.7 what is this, 9.5 handle move. The next place was when I entered a trade. Where was it? Okay, here I got into a trade and it gave me 4.75. I wanted 5 handles, and that's the thing. Sometimes you have to put all these things into consideration and see, like, maybe, just literally one tick. All I needed was one tick. It didn't get there, which was cool. I broke even. Then, if you notice, it actually came back here. This fair value gap I drew, and my stop would have been well protected right underneath this. Okay, maybe plus one tick. It came here and it actually went up. So I would have gotten more, but it's all right. It happens. I'm still trying to get a grasp of this. It's getting clearer and clearer each day. So next thing I saw was this. I entered right here, came all the way. It gave me 4 plus 4 and some change handles. I could have gotten out right here, but I wanted to target here. So I could have gotten out here. And the moment I saw it rejecting, and that's the thing, is you have to be nimble with price. And you can't just focus on, it's not very black and white. Like, it's a story. Like, you have multiple colors. So you have to understand that it's not just primary colors or black and white. There are secondary colors that also are found in this. So you have to understand both sides. Why is price reacting to this? Where could price draw to next? That you have to understand the reason why these candles are printing. Not okay. a bearish candle printed. It just printed. So that's not, you have to understand the context, the story. What is the language? There's a language to this. You have to understand it, so you don't take stupid losses. And even if you take losses, it doesn't affect you that much, because you literally can go straight back into the market and get your money back without having any emotions, because it's very structured. So that trade went, and if you notice here, this is the weekly, the gap opening, and this is the consequent encroachment of that gap opening. And I have like my midnight 8:30 open, 9:30 open. You're like, oh, but that's a lot of noise and stuff. I like to see all these things, because you literally, all these things, yeah, price literally bounce on and off of it all the time. If you pay attention, you can't just expect all these things to happen at once. Like, it takes a lot of time sometimes, and some people would get it early, some wouldn't. So but you can see how exactly price reacts to certain points. Like, look at this, 9:30 open. It literally, it opened, came back to 9:30 open, and it flew from there, got here. It's not random lines. These are not random lines. There's a reason why these lines are there, and you see how price reacts to these lines. Came here and it dropped all the way back down. Now this trade, market structure shift right here. I was expecting it to get down here, but it didn't want to go all the way to give me that discount, which was fine. And then I got in on this candle, this gap right here. I got in. My stop was right below this, and then I took it all the way up, and that was again under 9.75 handles. But before it got all up there was a little market structure shift here, and I saw this gap also. I got in, had my stop here, and so in combination, and as at this point I was risk free, because my stop would have been at break even already. So 9.75, 4.75, and that's going to give you about 15 and some change. Yeah, 15, let's just call it 15 handles right here. So now liquidity was swept right here also, and market structure shift, got in here. Literally, I could have gotten 5 handles from this, but I went for 4.75. Why did I do that? Because I got scared from what happened to me. Where was it? Right here. What happened to me here? So I was like, you know what? I'll just take that little one and let it be. So took 4.75 handles. This point, I was in the bathroom and you know it's where I placed it. Price was so deep. So if I placed it right here, and still yet I was able to get 2.5 handles. Now let's do some calculations. Got a calculator. So 5 handles plus 9.5, okay, plus, you've got 9.5 handles, you've got 9.75, and these are pips also if you're using US 500, plus 4.75 plus you've got another 4.75 plus 2.5, okay, and that gives you 36.25 handles. But you want to know risk to reward ratio, because 36.5, what are you risking to get 36.5? If you're risking 2 pips to get 36.5, that's not bad. But if you're risking like 60 pips to get 36.5, that is, that is not good. So we are going to do this where we have this first one. I'll zoom in a little bit. This first one is, you have 1.54. So calculator, we go see 1.54. So that's your risk to reward ratio, plus this is 3.17 plus, okay, where's the next one? This is going to be 1.86, calculator, plus 1.86, okay, Then this is going to be 1.12 plus 1.12 plus, this is 1.58 plus 1.58 plus 1.58 plus 2.5. 2.5 plus 2.5 is going plus 2.5. No, minus 2.5. Actually, this is going to be 0.56 risk to reward ratio. So 0.56, and that gives you 9.83. So you have $100,000 account and you are just risking $1,000, which is 1% every time. That will give you, you took the guess out of my mind, $9,830. Maybe after commissions and spread and all this stuff, you go home with 9,000 or 9,500. That is not bad. Say you are risking $100. Okay, you're risking $100 for each trade, and that is 98. Why would you want to trade again for the rest of the week if you're making like, $1,000? That's mad. Even if you have 2 of these days in a week, that's a lot. That is a lot. Which means multiply by 52 at the end of the year, you are going to be getting at least $100,000, which is absolutely mad. But even if you get just this once a week, that's all to supplement whatever. So that doesn't also make you quit your job. You still have your job, you're doing your job and stuff like that. But this is mad. If you're doing FTMO and stuff, honestly, if I was doing my FTMO, I probably would have targeted here and I would have gotten over my 10% for my first actual trade. And lunch hour, I could have maybe taken a trade here too and then read it all the way back here, but yeah, that's another one. This is during lunch. Could have taken a loss, but it's all right. It's one of those things. There's nothing here. Is there? Could have taken one right here, a buy, but I wanted some liquidity to be taken first. But anyways, that's it from me. So this is also to encourage you, Lord, if you are struggling with ICT concepts, keep pushing. There's some people that get it early, and there's something he said, I think last year, he repeats it all the time. The time frame of your graduation is different. This is not like college, where even in college, some people will graduate a 4-year degree in 3 years. Other people will do 2 years because they have advanced placement classes they've already taken while they were in high school. And other people will take 5 or 6 years because it takes them time to grasp certain concepts in the entire course. So it might take you time, it might not, but just take your time in understanding all these concepts. So me personally, like I said, I'm still trying to understand and put all these things together. I have my own strategy, my main strategy I use in trading, but it's not as precise as this. It's part of ICT's concepts, and that's the thing, is stop trying to water down a lot of the things he says. Exactly what he says, follow what he says, make it in a way you can understand it, but don't water it down, because he's giving you the raw stuff. When you water it down, it takes away from the actual value he's trying to teach you. Join the live streams. There's a lot of benefits in that. If you can't, try to watch it later, but honestly, if you have the opportunity, make sure you try to join, because you're actually seeing what price is doing live and direct. So, but anyways, guys, thank you for watching. That's it from me. I'll leave you lot to this. Let me know what you think about this down in the comments below, and I'll talk to you guys in the next one. Peace.